Hey, good morning, everyone. My name is Glenn Kirkwood, aka That Referral Guy, and I help business owners generate or use a referral system to grow their business. I have not one, but I have two special guests with me today. They are both co-director or directors with Katz Accountants. I've known one of them for, for a long time, and the other one for a little bit less than that. But I wanted to start asking you a quick question. Do you struggle? Do you seem to do a lot of hours in your business, but you just can't get it to grow? Maybe you're working a lot of hours in your business, but you just don't see the cash at the end. All right. Well, my next two guests are actually going to help you learn some very easy to implement things and some metrics on what you should be looking at to actually see a better bottom line. I can speak from personal experience about these two gentlemen who have helped me. So let me just do a quick intro. My first guest is Tim Garth. He's a business nerd. He cares about people and he loves to see growth and improvement in his clients. I can attest to that. And also in his team and his community, in his wider community. Dan Osborne is a director at Katz Accountants. He's a co-host of their joint show called The Two Drunk Accountants. He's a bit of a film buff, and he has a unique degree major in accounting and minoring in film. Ladies, he can also play the guitar and he sings a little bit like Jack Johnson. So let me welcome the boys to the show. Dan, did you know that intro was in there?
I didn't, but it sounds right.
Yeah. Good on you. Hey, welcome to the show, boys.
Yeah, thanks for having us, Glenn. Great to be here.
Yeah, appreciate you giving up some time. Now, you're not new to the microphone. You've been doing your podcast show, The Two Drunk Accountants, for how long now?
A couple of years now.
Yes, yeah, a couple of years. Started off as just a bit of a passion project, something to do for fun, to spread education and knowledge and try and make accounting a little bit more exciting for people. But it's turned into something that we love doing, and people seem to enjoy listening to it for some reason as well. So
it comes across as really natural now. But do you remember your first show?
Yeah, it hit the cutting room floor and never made it to air. Yeah.
All right. So, typically the stereotype is that accountants are quite boring. So with that particular show, even the name, Two Drunk Accountants, you bring a lot of fun to the world of accounting, don't you?
Yeah, we try to make it a bit fun because education is easier. Learning is easier when you're actually interested in it or you're finding it interactive and enjoyable. So, half of the show is just us. We love podcasts. So half of the show is just us talking about things we're passionate about, things we enjoy, things that are happening in our week. And the other half is hard-hitting content. So some people come for the content. I'm sure some people just come for the banter.
Well, it does provide a great show. I've listened to a couple of them, so thanks very much for coming along.
Thanks,
but for those people that don't know you, why don't you just take a couple of minutes and just tell me a little bit about yourself? I'll start out with Dan.
Yeah, so as you said before, I've been director here at Katz Accountants, co-host of the podcast. Similar to Tim, I guess my passion is really just trying to educate small business owners, trying to help them get through some of the pub content that they hear from their friends, coming in telling them, oh yeah, you can get JobKeeper. Well, maybe they can't. So my passion is really to educate businesses, help them grow, help them get more of what they want, be that more money, more time, more peace of mind, whatever it is that they need, and help them wade through the massive amount of disinformation out there or things that don't necessarily help them and just get them to where they need to be.
Okay, yeah. But what the ladies are really wondering is, do you play the guitar and sing like Jack Johnson? How did that come about? Tell us the real Dan.
Yeah, well, Tim's correct. I play guitar. I don't know if I sound like Jack Johnson.
You sound pretty good. If listeners want to hear Dan sing, we actually do a singing intro every week on the Two Drunk Accountants.
Perfect. All right.
Yeah.
Good to make you blush there, Dan. Tim, why don't you tell us a little bit about yourself and why is running? What is it? What's your goal there?
Yeah, actually, so I've been doing a lot of running lately. Unfortunately, I've got a knee injury at the moment, Glenn. So I haven't been able to run the last few weeks. Yeah. So we're aiming to do a charity run, a couple of friends and I. And we want to run the Bondi to Manly Trail, which is only opened up in the last few years. But we want to do it in under 24 hours, and it's 80 kilometers. So so if anyone's keen to support that, then I'll be posting about it on my Facebook and talking about it on our podcast. But yeah, other than that, I've grown up being in a family business. Cats Accountants was started by my mum and dad, as you know, Glenn. And yeah, I just really enjoyed the lifestyle that they built. And it made me really interested in being part of a small business and helping other small business owners. So yeah, that's what gets me going.
Well, tell me a little bit more about that. Who are the clients that you really love serving? Paint us a picture on, I know you do a lot of different people, but tell us the ones you really love serving.
For us, it's about relationship, and it's about working with clients who know what they want to achieve and perhaps might just be missing a few pieces, a bit of support, a bit of knowledge about accounting, and perhaps a few tools around business advice and business growth and planning, which we can be facilitating and providing to them. So it is interesting because that means we actually do have quite a broad, client base, because we can work with any number of industries, and we do. But for us, it's really about personality and people who are driven, they're realistic, but they want to achieve something and they have a purpose. I think that's what we love working with, and we find we achieve the best results working with.
I've been working with Cats Accountants for many, many years. And when I first started working with you, I definitely had a very clear goal and a path. And I was very task-oriented around achieving those goals. And then there was a period then when I changed businesses and I really fell off the rails for a lot of years there. And I didn't have any clarity. I didn't have any action items that I was doing on a regular basis. And this is how I know that this particular firm really cares, because they came in and in a kind of way saved me. And I'm back on the road now to changing that with clear, manageable daily activities that I need to be doing. And we've been doing that over the last I'd say 6 months. But Tim, you're a big instigator in that when we used to have those chats on a regular basis. So thanks for that.
Cool. Thanks, man. Yeah.
Why don't you guys tell us, what is the biggest challenge in business and how did you overcome it?
I think something that all business owners can attest to is just the overwhelm you can sometimes feel. There's just so much happening, whether it be with your team, with your staff members, whether it be things that are happening in your environment that you can't control, like COVID, whether it be compliance matters, tax, lodging your BAS, lodging your tax return. And that's, we haven't even covered things like sales and technology. So I think just wearing the different hats is something which we've definitely found challenging in our own business. And yeah, we're starting to really find that getting our team members in the right seats and setting their roles and responsibilities in a fun and incentivized way can help alleviate that pressure from us and give them clarity so they can perform and enjoy what they're doing as well. So, and in doing that, we're building a business that is scalable and sellable too.
Yeah, I think you're absolutely right that this is a problem that not just us, but most of our clients experience at some point, is that they're wearing all these hats, the business owner. They've started a business because they're passionate in something, or they've got an idea, or they have a concept of what their life will look like as a business owner, but they end up following all these different areas, having to do the marketing, having to do the sales, having to do the actual work, being a HR professional suddenly. There's all these things that you need to do that you didn't think about. And it can just get overwhelming. So finding solutions to that is often a step that we take with our clients when we're doing advisory kind of work with them, and kind of saying, all right, well, you're wearing all these hats. What can you not be doing? What can you delegate to other people? What can you outsource? There's various things that you can do to solve this problem, but it's very common.
Yeah.
One of the things you also said, Tim, off air was, you need to learn on what to say no to.
Yeah.
And so, for that makes me think, well, you know what? I suck at about 97% of things. I'm really good at 3%. And so I struggled with a lot of years. When I first got into business, as you said, Dan, I just used to do it all myself. And it wasn't until I found, your dad, when I said, well, I need an accountant, not only to just do the yearly or the company tax, but I really needed someone to help me manage the tax situation and the structure of things. And I really just did outsource it. I loved him because he just sort of said, hey, we're a fun family business. And I said, great. These are all the things that I suck at in the accounting world. Put together a package that'll suit me and what my needs are. And I identified that I was saying yes to a lot of those tasks before, and really, I just didn't enjoy them. Right, the doing the receipts and doing the payment of bills and stuff like that, I just sort of went, oh. So consequently, I hated it. I always left it to the last minute. I wasn't good at it. The thing that I didn't realize there, boys, was it sucked the joy out of the things that I was actually really good at, because I used to spend so much time doing the books and stuff like that. But as soon as I gave that up and sort of said, oh, guys, Tim, please, take this off my hands, I sort of went, great. Now I can play in the area that I'm really good at, and all my energies was in there. Would you agree?
Absolutely. And so for us as an accounting firm, you can imagine, we always have leads coming through that potentially might not fit in terms of our characteristics, or might not fit in terms of the style of work they want. I mean, some people just want a tax lodgement and they just say, make sure I pay no tax. And so for us, we'd prefer to work with someone like you, Glenn, who sees their time as valuable and sees their skills in what they do. And for you, that's building your referral relationships and building sales pipelines. So they're happy to work with an expert that's going to give them peace of mind, save them time, and with the advisory that we've been working with clients on as well, it's help them make more money too. So with everything that you have in your head anyway, as a business owner, it's just trying to untangle things and simplify things for you so that
just so that it works out for them. Yeah, exactly right. So tell me, to grow the business, like you've taken over from your mum and dad, and it's pretty much just the Dan and Tim show now, along with the team, who I know all pretty well. What are your plans? What are the things that you're doing right now to grow Cat's Accountants?
Yeah, well, I think as we'll get into soon, there's more than one way to grow a business. A lot of people just think it's more sales. To grow the business, I just need to make more sales. But that's not often the case. There's 7 ways, which we'll get to soon, that we have been implementing ourselves as well to try and grow. Our main focus really has been trying to provide more of the service that we want to provide, which is helping people. Our whole purpose is to support, teach, and grow our clients and ourselves and our community. So we're trying to do more of that. And we can pull different levers to achieve that. And it might be offering more services to our current client base, providing more quality service, which we always feel was great quality anyway, but just more points of contact, things like that, to really help grow, but also cost cutting, finding ways to do things more efficiently. There's a whole bunch of ways that we've been focusing, which we'll go through soon as well, to really help grow our business. But our main thing has been, let's try and provide people more with what they want, which is more support.
Yeah, the interesting thing for us, Glenn, is we're not marketing experts by any means. But each year we do tend to achieve a certain amount of growth in our business. And for years I've chalked that down to just like, oh, that's lucky, isn't it? But I think, when you think about it, there are ways to grow without, say, targeting aggressive leads in terms of, say, getting new clients. There are other ways to grow. So if we've found, we've basically documented those ways. And what everyone always thinks, and this is why you don't associate growth with your accountant or business advisor sometimes, growth comes through marketing. Growth comes through sales and leads. And that is true. That there is definitely a space for that. And I think our business could be better with that. And so
absolutely.
I'm trying to become better in that area. But there are other ways you can be growing still, if that's not an avenue for you or if that's not a strength for you. So so that's what we'll go through.
You got to know the numbers. Now, are you guys going to share your screen, or hopefully you're going to show what you did with one of my clients a few weeks back. Tim, that's what you're going to present today?
Yes, correct.
Okay, great.
That's right.
So I believe that there are many ways to grow a business. And when you're online or on Facebook and stuff like that, you see a lot of gurus out there and people promising you some things, right? And it can get overwhelming with thinking, I have to do this and this and this. But I just want you to think for a moment now. First of all, we said, make sure you look after outsourcing, all right? There are different people that you can bring on your business. One could be a marketing person like myself. The second one could be an accountant. Now, an accountant's going to look at actual numbers, right? Your activities. They don't really care necessarily too much about, and they look at it from an objective point of view. So, boys, if you bring up on the screen, if you just go to share your screen now, and take it through. They're going to take you through some things now that actually you will be able to see an immediate difference to the way that you would implement each of the different strategies. Okay.
Cool. So I just shared the screen, just checking. Okay. Can you see that?
Yeah, I will add it to there we go.
Oh, great. Okay. Perfect. So we've got here the 7 ways to grow your business. So we've got a couple of things we will show everyone today. The first thing is the 7 ways.
Oh, sorry, Tim. Can I just stop you there? Listen, if you've got a question, just type it into wherever you're watching us from, either my Facebook page, That Referral Guy, or whether or not you're in the group, right? And then we'll try and get to that at the end. But just type in your question. If you can, also click the StreamYard, because it means that your face will come up, and it means I can direct the answer specifically back to you. Sorry, Tim. Where you go?
Yeah. No worries, that's fine. So first of all, we'll go through the 7 ways, and then we'll actually do a worked example of how a real business can tweak up to all of the 7 ways to grow their business in a really large way and see very good results. So the most obvious one, I'll try not to slide my screen around too crazily, is to actually, and this is one that everyone overlooks, is to retain your existing clients. So often when we think growth, like I said before, we think new clients. I want new leads and I want to convert them, which is definitely a way. That's actually number 2 there, as you may be able to see. But step number 1 is to keep your existing clients, keep them happy, and actually wow them. And you may find, and you're the expert at this, Glenn, you will get referrals from that too. So increasing your client retention rate and wowing them and delighting them and instigating referral programs is one of the ways you could be growing your business that you may have overlooked.
Yeah, for sure. So as we're going along this 7 ways, the second one, which Tim mentioned just before, was increasing the leads generated. And this is where your marketing comes in. And this is often where people think is the main way to grow the business. We need more leads because we can convert those into sales. And it's pretty straightforward. You do more marketing, you get more leads. You make plans for the various avenues. It could be through online. It could be, Google ads, Facebook, social media. It could be referral programs with different partners. It could be all sorts of ways. But generating leads is usually the main thing people think. But it's just one of these 7 ways.
Yes. So with those leads, the third way to grow is to increase the conversion of the leads. So if you're building the inquiries, if you can convert more, then you're going to grow your business. You could actually possibly have less leads, so be spending less money on generating the leads if you could increase your conversion. That's another way to grow. That's number 3.
Yeah. Number 4, increasing your transaction value. So this is just taking those existing clients and selling more to them. Instead of selling one item, sell two. It might be at a discount, selling two things together, but you're increasing the amount that you're actually providing to them. So increasing the average transaction value that you're selling each client is an easy way to grow that business, which is why when you go through, the classic example, would you like fries with that? That is an example of increasing the transaction value.
Yeah, true. Another option which you could look at is to try and increase transaction frequency. So the joke I always like to make here is if you're a landlord, if you could add a 13-month to the year, then that would be fantastic. Your revenue is definitely going to grow. But you may not have thought about other ways that you could encourage your clients or customers to actually come back more regularly. And we see this with some great examples. Online subscription to pet food. They offer you a discount to have an automatic order every month. So that could mean that instead of the customers buying every 2 months, yes, they're going to offer them a 5% discount, but they're actually going to be buying every month instead. So that's a really great way to grow.
The one that I like is on the bottom of the shampoo bottle. It says, so rinse and repeat. And so that's a great way to increase transaction frequency. But I've actually seen the 13th month done. If you get a VA from the Philippines, they automatically have a 13th month.
There you go.
And so that's the way they sell it to you. But really, it's just a bonus. I'm going, okay, when did they become 13 months? I mean, I live here and I've still got a calendar with 12, but they sell it as a 13th month.
That's a good business model. Yeah, 13-month business year.
Yeah,
That's
for 12 months of work.
Okay, so the last two are really interesting ones as well, and they're more cost related. And this is where the accounting side of things comes in. And all of these ways we've shown you, we're going to flip to an Excel spreadsheet. Classic accountant going to an Excel spreadsheet. But we're going to show you how this is actually an equation for your business, and there's different levers you can pull to achieve growth. So number 6.
As Tim was saying, I think the first 5 are really adding to your sales. If a profit equation is simple to sales less expenses, then the first 5 increase sales, the next 2 reduced costs. Both of those, equal more profit. So the 6th one here is reducing your cost of sales. So these are the variable costs that change with each unit or subscription, whatever it is that you're selling. These costs go up and down depending on the volume of sales. So this could be the actual cost of manufacturing goods. It could be the cost of purchasing your stock. It could be productive staff members that are delivering a service. So all of these costs can be reviewed, and if you can find cheaper suppliers, or if you pay a supplier earlier, you get a discount. Things like this can reduce that cost of sales item and increase the profit.
Yeah, so a 1% reduce in cost of sales for a business that might have $1 million turnover can have a huge impact on the bottom line. So that's actually, believe it or not, a way to grow is to reduce your cost of sales, which is often overlooked.
Yeah.
The last one there is reducing your overheads. So similar idea to the cost of sales, but your overheads are more the fixed costs in your business. And a lot of businesses may have looked to do this during the COVID period because if you have a downturn in sales, then you'll want to be trying to, change your business model. And one of those ways is by reducing your overheads. So a very large overhead, which most people would be reviewing or potentially not needing if they're working from home, is rent. So if you can find ways to, trim the fat, I like how here it says not the muscle. So you've got to think, you want to trim the excess, you've got to trim the fat, but we don't want to remove anything that's strategically important for our business. So if your location is important, if you're not set up to sell online or work from home, then I wouldn't be trimming that as an expense. So we're not saying here, if you've got excellent advisors or things that are working really well, you need to go and slash them in half for lower quality services. But if there's anything you can see that you might be able to trim, that could be another way to grow as well.
Yeah, exactly. You don't want to end up getting rid of an asset that actually gives you the ability to generate that income. So trimming the fat is purely just getting rid of those little costs that have creeped up over time. It could be as small as changing phone providers. It could be, you might not need a second location because half your team can work from home now. There's lots of things that can provide that.
Sometimes it's in your thinking because pre-COVID, I used to drive around and see clients face to face, do coffees. So there's the coffee itself, there's the petrol and the fuel. And then I went, you know what, because I'd done building all the BNI chapters. And then when I got into this new product that I'm doing, I started using Zoom meetings. Now, that increased the amount of people that I could actually see. It was only $20 a month for Zoom, right? And yet I used to spend that almost a day on fuel. So I just changed the way that I was actually working. Now, since COVID's come in, now everybody is using Zoom, or certainly knows how to use it. So we won't ever go back to seeing clients face to face.
Yeah, and look, we don't know what's going to happen in the future in a few years' time. That could give you a competitive advantage. So you may want to increase that overhead again, and your other areas of business with your sales may have changed then too. And so you can afford to have more overheads. But one way to grow in the short term that many people do overlook is reducing their overheads. That is growth, because growth is measured by your bottom line net profit. So what we will do now is show you the equation, if that's all right, Glenn.
Sure, go for it.
I'm gonna stop sharing this, and I'll just jump into our Excel spreadsheet.
You can actually see that we do have.
Look at that. See how close they are?
Yeah.
Yeah, but they're maintaining our social distancing of 1.5 meters, even online. And this is the first podcast that I've done with other people that have really cool looking mics as well.
Yeah,
everybody's geared up on this one. We're all tech, we're all tech people.
All right.
I don't know how cool these are. I think they were $40 on Amazon or something. They just look more fancy than they really are.
I like the sound quality for me. I can't stand listening to bad visuals. I'm okay with, but I can't stand bad audio.
True. One thing that's actually
podcast.
Thanks, Glenn. One thing that's actually quite funny with the video stream, I'm looking to my left to look at Dan, and before his video was to my right on the screen. It's messing me up. All right, so I've shared the Excel.
Sorry, buddy.
Right here. So whenever you're ready,
I'll add it to the screen. There we go.
Cool. Yeah. So I'll zoom in a little bit and just let Dan explain this to everyone.
Yeah. So what we're about to show here is how small changes in each of the 7 ways that we just discussed can actually make a much bigger difference to that net profit figure at the end, because everyone thinks, as we said, that really you need to increase those leads, make more sales, make more sales, make more sales. But we're showing that, make more sales. That's definitely a strategy that you should do. But if you combine that with reducing some of your COGS, reducing some of those overheads, retaining a bit more of your current existing clients and selling, maybe more products to each of those clients, how much of a difference that actually makes.
So our 7 ways to grow are highlighted with these dark fields. So we've got a business here that, I'll just slowly move right, has annual sales right now, before we change anything, of $1.1 million. Their cost of goods sold are 70%. So let's just imagine they're a manufacturer. They sell things. So of every dollar they sell, on average, they retain 30 cents from that dollar to go towards their profit. That then covers their expenses, which per annum we have to imagine is $265,000. Now, we've got up here a net profit calculation and a basic valuation. We've often heard 3 times your net profit, if you've got a highly systemized business, is the value of your business. So that's just to give some indication of the value of looking at this and trying to pull different levers. So we've got on top the old figures. So that's what we're working with currently. And then we're going to make some changes to this. So throughout the process, let's just slightly improve everything. So if we retain 82% of our customers, we're going to have 627 customers retained instead of 612. That is one way to grow your business, to retain 2% extra than you usually do.
And that could be done through small things. It could be, as we said before, making an effort to have a few more touch points with those clients during the year and asking them what they need, or small little non-essential things that make the clients feel valued, or whatever it is. Small changes can mean a client stays versus leave.
I think we can agree 2% is not a lot. And that's what we're going to do across the board here, is make very small changes and see what the outcome is. So with our number of leads or inquiries, in fact, we could probably even leave that the same. Let's just say, look, we're doing a lot of good marketing right now, and we're quite happy with it. But converting at 50% is just a little bit low to us. So why don't we try and do 55?
You refine your sales technique a little bit. You have a little bit better of an onboarding process, and the way that you structure your your actual proposals is a bit different. You've streamlined it and made it a bit more easier to actually remove the friction from actually accepting these proposals. And yeah, you've been able to increase your conversion rate by 5%.
So next, we can see now our total customers has increased a little bit. That's fantastic. So what we're going to do now is look to increase the frequency. So let's just increase that by a very nominal amount, 0.1, which we can agree is not a huge change. And the transaction values. So this is your upsell, or even just a simple price change. So we may just decide to put the prices up. So we'll plug that into there. We can see already sales have increased pretty dramatically. Over
200 grand.
Yeah.
just under 200 grand.
So that's by pulling every one of those levers. Maybe you can't achieve pulling every one of them at the same time, but very small changes across the board can achieve a very big result. Now, we haven't exhausted all of our options to grow still. We've still got the cost of goods sold and the expenses.
Mm-hmm.
So let's just drop the cost of goods sold from 70% to 69%.
It's a 1% drop.
1% drop.
And that could be achieved easily through, as we said before, maybe some suppliers offer discounts for early payment. Maybe there is a cheaper supplier that offers the same quality. Maybe, there's a whole range of things you can be doing to drop that COGS by 1%. It's not a big change.
Mm-hmm. And then if we could find $10,000 of our normal expenses to reduce. So oftentimes you set a target of reduction for your expenses. Maybe you don't hit it, but without knowing, we often grow our expenses every year as a business. So just setting out to reduce some expenses every year and find things that are no longer necessary is a really good mindset to have, and does directly convert to growth.
Yeah. As an accounting firm, we have subscriptions to so many different softwares.
So much software. Yeah.
Yeah. So advisory, different apps, different accounting programs, all sorts of things. So that's something that we review every single year to say, okay, what do we actually still use? What do we still need? What, some subscription services offer it can be a monthly subscription, or if you just need one file, you pay an amount, and it actually works out cheaper that we just need the one. And there's all sorts
sometimes, Dan, if you don't review those on an ongoing basis, sometimes you actually only need them for 6 months and the business changes a little bit and you no longer use it, but you keep on getting that auto debit, right? So this is one of the things that Tim, your father, taught me, Warren, and I used to just write down on a spreadsheet all the softwares and when they became due, and I would review them every January, even just by asking the team, okay, so who's using this still? Who's using this? Yep. And unless we could find a reason, now there was always, I'd say 5 to 6 different types of software that we were getting. And what you don't realize, it's $1 or $2, right? But when you add 10 of them together and it's $20 a week, right? And it's $4,000 a year, you're sort of going, there's your reduction.
Yeah. We even, as silly as changing from Adobe PDF, we are accountants. We don't need special PDF editors. So we've just changed from that to a different supplier. And that in itself might save us $1,000 a year.
Correct.
But when you combine that with many other changes, you can actually save quite a bit. So it's always worthwhile reviewing that.
Mm-hmm.
So if we zoom out just a little bit, we'll now be able to see the culmination of all of our changes. So originally, our net profit was $87,000. Now our net profit is $165,000, which culminates in a higher business value too.
Yeah, almost doubled.
Yeah. So not only are you getting more now, if you were to try and sell your business, it will be worth more as well. So we've improved our profit by $80,000. Sometimes I'm not a fan of these spreadsheets. This is for illustration purposes only, but you can see by making small tweaks, you can actually make really large improvements, and you might not feel like you are changing much at all. So if you might not be able to change 7 things, but if you could change 2 of these, I think that could be a much easier way to approach growth than thinking, I need to double my client base in 6 months. There are actually other ways that you can grow and just keep building a quality, high profit business.
Yeah, that's right. And the interesting thing is that, you didn't even increase your client base. If you're looking at your existing clients to the total customers at the end, you've actually got less clients.
Yeah, true.
But you're making more profit.
Yeah, exactly right. Exactly right.
Yeah. Okay. Yep. And we added no new leads in there as well. Yeah.
Yeah. We could have grown leads. If we're facing the prospect of retention rate being lower, what this tool can do is actually show you other areas you might need to tweak to increase to offset that loss. So this can become a bit of a crisis planning tool if necessary, or it can be a really valuable forward planning tool in a positive way as well, to try and plan some new marketing activities and set some goals around what you do want to convert or how many leads you do want to generate. So, but it is a really good reminder, don't overlook the value of treating your current customers and clients well, the ones that you want to hang around at least anyway. So there is a lot of value.
We all have clients that we don't want to hang around. But, that's the old 80-20. You should try and get rid of those 20% of clients that seem to take a lot of your time.
That's that saying no. Yeah, we all try and do right by everyone. So yes. But so hopefully that's a tool to try and simplify the process of growth for business owners out there.
Yeah, I think what we like to use this in conjunction with is you do a plan, you come up with your goals, what you want from the business, you factor all of that into a broader business plan, you set out a budget, and you look at where you are now and then where you need to be. Yeah. And there might be a gap of 200,000 in sales. There might be some gap here that you can then use this to fill that gap.
Yeah.
And so this is a step in the process in a broader business planning system,
which we often refer to as now, where, and how. So yeah, I think Dan's hit the nail on the head there. Absolutely. So
perfect.
Sharing that.
Hey, listen, I've got a couple of questions that have come up. Let's start out with the first one. I think this one's directed at you, Dan.
Okay.
But is he single? All right. So
I get asked this a lot. No.
Okay.
He's not married. He's not married though, but he's under a lot of pressure to get married soon. For obvious reasons.
13 years is probably enough time to get married.
So procrastination is not a problem for you then.
No.
Okay. All right. So so when these comments are coming up, it's just a result of you just not clicking, StreamYard, so we see your face. But I can turn to, I guess, one of the apps and then find out who this one. Anyway, that's very cool. Finding solutions for all the hats, not just number crunchers. Okay, so
Thank you.
Okay. That's more of a compliment, isn't it, rather than a question? Anyway, since for many businesses, one of their largest, sometimes largest overhead expenses is wages people, shouldn't labour efficiency ratios be one of the hugest levers you try to adjust? That's a great question.
So I've got a really good, and that is an awesome question. there's a really good point on that. So often we see people overlooking the fact that their productive staff members are in fact a cost of goods sold for their business. So a good way to actually build this into what we just showed you is to differentiate between staff members who are overheads, and that could be management, admin, sales, whereas productive staff members, let's just think about people who are doing the work. So if they're on the production floor, or even in our office, the more the people who are doing the actual tax returns or business financials. Dan and I are included in that. We might even split our time 50-50 and our cost 50-50 between cost of goods sold and expenses. So that's one way to actually try and work out what efficiency you are getting or what return you are getting on your productive inputs of labor and staffing costs. So that's an awesome question, and something that we see a lot. People don't include any wages in their cost of goods sold, and by doing that, you'll be able to start measuring more accurately what return you're getting on those direct inputs.
It could even be that a capacity problem. So you don't need more sales, you don't need more leads, you don't need to retain more clients. You've got enough. You've actually got too much. And you just can't get enough out of the inputs that you're currently putting in. And that's an efficiency measure. So, working out capacity problems in your business, and that kind of comes down to the 10 hats again a little bit, but, capacity problems with those productive staff members and making them as efficient as possible is definitely a lever you can pull to essentially increase the sales and reduce the cost of goods as a percentage.
Yeah. Now, just so that you know that the first question, is he single, and that question came from the same person. So that a bit of a balance out there. Was actually a guest on the show a couple of weeks ago, Leah. So great question. Cool. Thanks very much for that. So she is watching from Pittsburgh.
Oh wow!
In the States. Okay, so here's
playing right now. I think I saw the Steelers. I think we have a TV upstairs in our office that has the NFL on. I thought I saw the Steelers playing. Okay. Or the Pittsburgh Steelers. Maybe I was wrong. I don't know.
That and the San Francisco 49ers were the two teams that I grew up, idolizing in American football. Yeah. Okay, so this one here, client retention. Do meaningful quarterly business reviews full of value, and also client appreciation gifts quarterly. I'm going to dive in on this one and think that some people make mistakes here, and they do their staff and also their clients, and they judge them based quarterly. If the best way that I've got to think about this is sometimes you take on a client and you're not really sure, and they don't produce the yield that you want them to, and you could cut them off. Or it could be the other way. An employee might take a while to get up to strides. It comes down to, I think, have you invested in that actual person or the client? I totally agree in getting rid of clients that are not working within your business. And there's probably an onboarding question there. But I think it's a mistake sometimes to go and do things quarterly, because I'll be so upfront here. There was a point there where I wasn't a great client for cats, and they could have absolutely just cut me off. All right. And what I'm seeing is, with a little bit of love and support, that I'm now going to come back to being one of those good clients. And if they had judged me on it being quarterly, they would have got rid of someone. All right. Well, that means that they've got to spend time in finding a good client again. All right. Now, I will turn back into that, but it came about by them giving more than they were receiving at that particular time. All right.
Yeah.
And both Dan and Tim know what I'm talking about. Things will change and they're back on track. I think way too often people do this with employees, potential clients. They just look at them as a quarterly particular point. Anyway, I'm going to ask the guys from the accountants to chime in and see what they think.
I think on the other side of that, that's us wanting to remove clients that we don't particularly want, but stopping clients leaving. I think a big thing that we're getting better at and we're learning more about is actually communicating the value you have provided to them. It's not necessarily just getting in touch or sending them a gift, which people love, but I think it's also communicating, here's what I've actually done for you, and here's what that means to you. So in our instance, it could be things that we do every day in our business, such as save someone a bit of tax, we might not even think about it. But if we have that written down in, say, a values diary, and at the end of the year, if we're doing an annual review with that client for whatever reason, we can go, hey, just letting you know, during the year, we actually saved you 20 grand in tax. Your advisory sessions with us, your business has grown 20%. That equals this amount of money. This is what we've provided for you during the year. And communicating that makes them remember, oh, yeah, that's right. They did do that, because it's easy for them to turn around at some point and go, oh, they just do my tax. I don't worry about that. But actually communicating to the client, here's what we did for you, is a big way to increase that client retention. And we're only just learning that now.
Yeah. Yeah. It's an interesting one. That sometimes you have to point out the value for people to see the value. So
correct. Absolutely. Look, I had the highest client retention across BNI region for 7 years in a row. And that is exactly what you said there, Dan, communicating the value. And what I used to think that people joined our organization for was to get referrals. Through asking for feedback, I actually learned that people came for referrals, but they also got personal growth and leadership skills. And sometimes some people just came because of the community interaction, right?
True.
Which, I sort of went, why would you pay close to $2,000 for that? But for some people, that was important to them. So when I started focusing on the 3 different types of metrics and sort of saying, it's really great to have you on board and be part of our team, and then make sure that we were providing those trainings and additional support for people. Consequently, we all of a sudden had a lot of our clients staying. And as you saw in the diagram that the boys were just showing you before, client retention is, a very powerful strategy. So get out and work. Hey, listen, look, they've come back and sort of said, hey, go Steelers. And also, I love this one. Glenn had to be kicked into the client remediation classification to help him learn how to be a good client again. Yes, that's very, very true. All right.
No, look, Glenn is just such a good person, and we all go through things, and so it was just a matter of I respect Glenn a lot and have so much time for him. So there's never a chance that was going to happen to you, Glenn.
It was a very tough time I went through, but I've come out the end of it. Hey, so what you guys showed on the spreadsheet is pretty good. It's actually really cool. How could people watching it live or from the replay, how could they get a hold of that? What should they do to either reach out and just have a bit of a chat with you and work out their numbers?
Yeah, so we will share our email address for our practice. So what we have is something that we can send to you for free, no obligations or anything like that, which is an action list for you to have a look at the 7 ways that you could be growing your business. So it's a step-by-step list of the 7 ways, and it's for you to brainstorm things that you could change in your business. So we'll make our email address available to everyone. Like we said, it's free. We'll send you that. And if you'd like to have a chat with us and review what you've brainstormed and figured out, then we'll also make Dan or I available for that too, for a phone chat or a Zoom catch up as well, which would be cool to meet some of the people watching face to face. So
cool.
Yeah, absolutely.
Hey,
the
guys,
other way is we have the podcast as well. So if you just if you like the sound of Dan singing and you want to hear more of that, then tune into the podcast or anywhere where you listen to your podcasts. Basically.
So next week, Dan, I want so this one's for you, Glenn. All right. Or maybe you should actually say, hey, this one's for you if you're in Pittsburgh. This one's for you.
Thank you, Pittsburgh.
Love it.
Hey, thanks very much for being on the show. I will make sure that I put their email address in the well, actually, Tim, you can probably go in and do that, being part of the group.
Sure.
I can tell you this, though, that if you're looking for accountants that actually really care, that make themselves available. So if you need to ring up, it's not you wait 2, 3, 4 weeks and stuff like that, and find people that actually want to help you grow your business. If that is you wanting to learn how to grow, do yourself a favor, reach out to them. They're great peoples. So thanks very much for being part of the show. That's it from me signing off with a reminder to make, build and share connections, and I'll see you next Tuesday. Thanks very much, everyone. Bye for now.
Thanks, Glenn.